Good afternoon. Welcome to another video brought to you by Total Control Traders. A big thank you goes out to all you ladies and gents for watching and subscribing. We are coming up to 200 subscribers through pure organic growth and zero marketing. And to me, that's an impressive feat on its own, as even though I was a financial planner, a senior financial planner before, my book of clients was only about 250 to 300. So a big thank you to everyone for watching and subscribing to our channel. Also for sharing the channel. Thank you so much. Make sure to leave a comment down below and let me know what tickers you are watching, you are interested in. Now today we are going to start it off. It is a weekend ticker review video, but we're going to start it off a little bit differently. In today's video, we're also going to be covering some non-traditional patterns that I've noticed over the last little while, last month and a half, 2 months kind of thing. Aside from the one we talked about in Wednesday's video, there's a couple more that I've noticed. So make sure to watch to at least the first little bit of the video and cover the 3 patterns that I've noticed. All right, let's get into it. First one we're going to be looking at is the oil. Requested by Kwanzaa. Let's take a look. It's been a while since we looked at it. The chart looks a little bit messy. We'll clean it up as we go here. All right, this is on weekly chart for oil crude. And there may potentially be another trend line here, so we'll take a look. Maybe over here. Yeah, it doesn't work that well. We can see one of the rejections from before was there and some supports over here as well. But doesn't seem to be that strong of a trend line. 2 supports, 1 rejection, another minor support here. Anyways, okay, so on oil, money line has been lost and we are slight rejecting off of it right now. Key zones seem to be working well so far. Still rejecting, so 1 rejection from here, bounce from the next key zone, another rejection from the top end of the key zone, coming down, bouncing from this one, making another, so we lost it by a little bit, but there is a support there on the daily. Let's take a look here. Rejection, chop around it, 2 rejections here, minor support, another support here. So 61.63 is a very notable price for reaction, and based on these shorter term trend lines, we can see that the momentum has been lost and we are in the daily downtrend on US oil. Potential for reversal now. Let's clean this up. So these trend lines are no longer in play. Lost that one, lost that one. This one potentially still in play with a rejection right now. So it's 1, 2, 3 supports, 4 supports before a gap down. Lost it. Coming back for back test. So this could be a back test of this short-term trend line for a rejection. Bear's gonna need to see follow through tomorrow, or not tomorrow, Tuesday. Market is closed on Monday for both US and Canadian. So hope you guys are having a wonderful start to your long weekend so far. Anyways, let's take a look. So money line, 1, 2 supports, 3 supports, and now we have broken bear on it. There's a chance for a daily reversal right now, so we can see lower low, lower high, lower low, lower high, lower low. Is this a lower low? No, near double bottom, lower high, and then lower low again. And now we formed a higher high, a straight shot to higher high, potentially looking for that daily higher low now into a daily trend reversal. There is something notable here on the weekly as well. There is a weekly bear divergence that has potentially now corrected, likely now corrected. We're gonna have to see if there's further follow through. So bear divergence right here on the weekly. Bull's gonna need to hold 61.63 support. So last time we got down there is 61.69. If this is lost, it's going to be a weekly lower low, losing that key support from previous resistance and support. multiple resistance support. So this is short-term wise. We're gonna, if we lose that, we'll likely see further downward price action into that next key zone around 57 at the top of the key zone. So this bearish divergence, the way I'm seeing it is, I'm thinking it's likely corrected already with how much it's dropped from RSI. It's 77 all the way down to 43. But we're going to need to see a daily higher low to form in order to confirm that the bearish divergence has now played out. And let's take a look where the bounce could happen from. So most ideal case always with 0.382, and we can see there's been supports that's found there already at about $67. Bulls ideally want to hold 67. Worst case scenario, must hold 61.63. All right, so that's oil. GP 0.5, yeah, okay. Next is FD, face drive. Same thing requested by Kwanzaa from our chat group. Funny you mentioned this stock, because I was actually looking at it Thursday, Friday. I was looking at it from a standpoint that's coming down to this all-time low, previous all-time, okay, maybe not, previous all-time low at 55, but we did find a base around 1.9, $2. You can see 1, 2, 3 supports around this area. So is there a key zone around here? You can see clear chop around it for the long time. 2, 3, 2, 2, 4, 0. Probably 2, 3, 8 works better. Yeah. And then all the way down to 195. That's where the other support was. And we're right on it. Oh, the bulls are trying to hold it. Top end of 238, and we'll close at 237. Bulls are really trying to hold it. So there is definitely a bounce play coming up here. Let's see. Ideally, I want to draw all of the key zones to identify where the bounce could potentially go to. So 1110 is definitely a notable area as well. 980, 950 some. What if we go to here? This is $9. Yeah, that makes sense. We can see lots of supports here as well. Why are we doing this on the daily? Let's do it weekly. All right, there we go. Wow, this one really served as resistance. Reject, reject, support, resistance. Yeah, I don't know what this circle was from, but it's been a while. Okay, so definitely another notable price here. Rejection, support, chopped around here, support again. That makes sense. Even if we were to go a little bit higher, yeah. It's kind of interesting because usually when I draw out key zone areas, you can see that the key zone is thinner on top and gets thicker as you go to previous supports. But this one seems to be working out opposite, meaning giving me a sense that the chances of it revisiting previous high is going to be relatively low, but there is going to be bounce opportunities. Specific key potentially right now we are extended on the daily 8 with huge bear volume, huge volume, potential volume climax on the weekly, which is very rare. Potential daily as well, volume climax. You can see huge volume coming in. There is, and we're coming right at the support. Very key support. I would imagine we're oversold on all time frames. Okay, even the weekly is getting oversold. 4 hours, ooh, 13. Potential for 4-hour bull divergence. We're gonna need to see a bounce right away on Tuesday, starting right away on Tuesday. Hourly, whoa, is down in the single digits on the RSI. Bull volume starting to show up a little bit. 30 minutes looking decent. There is a 30-minute bull divergence that's already formed. So it's right here. 30-minute bull divergence already formed. So phase drive, when I was looking at it early on Thursday, Friday, the chart wasn't ready. But it looks like the way it's closing on Friday, if we were to see a gap down onto Tuesday, that would be most ideal. What I want to see is potentially in the gap down. Ooh, that's a lot. Okay, maybe not. So, well, most ideal would be gap down to this low end of the key zone. Another 16%. Man, that would prove to be, that should provide a very, very juicy bounce from here. Even if we were to go back to that daily 8, we're looking at 130 some. Let's see, Tuesday will probably open up lower. Well, if you're about 100% of upside price action from the gap down to the daily 8 alone. If we were to measure a fib, that how is that even going to work out? The last move has been from up here, $14. So let's say Friday's low is the bottom. If we're looking at upwards to the 0.382 alone, that would be a 220%. So risk to reward is definitely there. The company, likely there's what's under the water, the fundamental wise, I don't think it'll be worth it for investing long term. What you could do is, you could go relatively middle or decent sizing near the bottom, because we are at the previous, near the all-time low. Put in a little bit of sizing, whatever you're comfortable with, and then wait for that bounce to the daily 8, just the daily 8 alone, and take half off. Then the rest will be free riding, right? So FD, actually I might make a note of this myself. It's not something I would be comfortable investing long term, but if it's free ride, hey, why not? All right. Now let's get into our normal tickers. No, actually, let's go cover the notable patterns that's been coming across my screen. FD is definitely giving on top watch on Tuesday. All right, first one. For those of you that did see or didn't see, regardless, on Wednesday's video, make sure you check it out. Well, I guess you don't have to if you're watching this video. So with Nvidia, there is very notable pattern. This is a very classic example of what we're going to be covering for this specific pattern. Breakdown, fake out, going into new highs, coming back to GP before the actual breakout, which ended up being 50% on that first run, ultimately coming to a 70% run so far. And AMD was a very notable same pattern. Breakdown, fake out. You see it breaking down below this previous resistances, or below these previous supports. A breakdown, fake out, a run up into not new all-time high, but then it came back to the GP. So just depending on how you measure the GP, it should be the most recent move kind of thing. GP before an actual breakout. So this one provided a 45% move, very similar to Nvidia. And then another one was Visa. This was the original one we noticed back in July 19th video. Similar idea. Ignore the arrows. Let's see, where was it? So breakdown, yeah, right here. Breakdown, fake out, coming to the money line, moving into a new all-time high, coming back to backtest this GP before a move up. Now, keep in mind, this is Visa, so the move is not going to be nearly as crazy. So the move was 15%, and the ultimate move was 22%. And now there is another opportunity, as you can see by the arrows. Previous trend line rejections, 1, 2, 3, 4, 5 rejections before breaking over, backing to visit to that GP, and then ultimately a break and making it support, and now we're seeing another touch on this trend line potential, a big support here. So for those of you that are interested in building a portfolio, right now is a very nice spot for a first entry on portfolio for Visa. It is at that trend line, it is at that 0.5 fib retracement of this whole move up since the breakdown fake out. Okay, this move was 31% and we have retraced 50% of it. Very nice first spot for a entry on long-term investment portfolios. Anticipating a bounce to at the very minimal the 0.382 where we see previous rejection supports, lots of supports here, rejections, more rejections here. So 233 is what I would anticipate the bounce to go to at the very minimal. Ideally, we probably want to see a 0.5 money line back test kind of thing. And another one is Amazon. All right, so this move was stuffed a little bit due to earnings. Similar idea. So if you look at this, breakdown fake out back here, coming to this long-term trend line, and then the move to new all-time high just by $1.75. Move to new all-time high back to visit this GP of the move before an actual breakout that got stuffed due to earnings. I think that they also announced on this earnings, they also announced Bezos' retirement. So that really stuffed it. 20% move, should have seen a whole lot higher in my opinion, but for a blue chip, this moved pretty decently. And yeah, anticipation is Amazon should see new all-time high in the next month, 2 months, before the end of the year. Amazon, another one of that same setup. I don't know what to call this yet. Breakdown, fake out, new high. Wolf pattern, maybe we'll call it. Wolf pattern. Wolfed those bulls here. Wolfed those bears here. GP before, and then wolf the wolf the bull, wolf the bear, wolf the bulls again. No, it didn't wolf the bulls here. So the reason why I say wolf the bulls is it stopped all the bulls out here, stopped all the bears out here, stopped hunted on the new highs, and then the move actually comes. So double wolf pattern. We'll call it double wolf pattern. All right, yeah, so double wolf pattern. Next, there's a couple more very similar pattern, very similar setup. Now is potentially looking at follow through. First one being Netflix. Okay, we entered Netflix. What was it? I want to say Wednesday, Thursday. Likely Thursday. Friday. Yeah, likely Thursday. On the break to new all-time high. So very similar setup. You see a breakdown fake out passing these supports from back here. And then the moves start going up, back testing this GP before an actual move comes. So there is still a chance due to this move being not new all-time high. There is still a chance that this is the actual, so this is the breakout, this is a move to a new all-time high, and then we could come back to backtest GP. Now depending on how you draw it, it could be this GP, it could also be lower from the move from this whole move. So we could also come back down to 520, and that's why my sizing on this entry is relatively small. I'm looking at adding, whether it's going to be 540 or 520, going to have to see if we start pulling back what that looks like. But the reason why we decided to enter, or I personally decided to enter on Thursday, is because there is a chance that this could be the move, and it just continues to run. I'd rather be in. So there's no play on call as of right now yet, no position for option trades yet, but want to see what the following action looks like first before deciding what to do for option plays. Now remember, this Netflix is a long-term sideways action. It's been over a year already. The breakout should prove to be either very aggressive or it's going to prove to be very long time upward price action. Netflix, one of the top plays I am currently in, and will only be adding to this position. Looking very good, loving the setup on this one. And another one, very similar setup as well, is DOCU. And this one, it's actually DOCU should be before Netflix. This is just starting already. So let's replace that. All right. Yeah, so DOCU, same thing, long-term sideways since June of last year, coming a breakdown fake out into new all-time high. Breakdown fake out, new all-time high. Yeah, that's right. And let's do GP. So right now I have it drawn from here, just because this is the most recent move. There is a chance that it could be the whole move's GP, or even higher. Let's see, if it's higher, you might draw it from here, but I like this one the most right now. I want to see, you know, we are seeing a double top right now. Strong bear divergence. Double top right now with, where is that high? Right here. Okay, no, not strong bear divergence anymore. So this was strong bear divergence. Came down. Earnings came out. Big bull move, unable to break into new all-time high on this big bull volume. Very notable. If we're to reject from this double top, 314.70s, if we were to reject from here, I would be looking at first the support 270. Now once that's broken, we'll be looking at GP right here, back test of this previous wedge upper trend line as well. I'll be looking right here for entry. First entry. All right, so that's the double wolf pattern, one of the ones that noticed. And the next one, different kind of pattern, is we'll call it earnings ER gap down pattern. Yeah, ER gap down pattern. First one is Amazon. Now, this is kind of interesting that Amazon qualifies under both patterns, but anyways, hey, when it works, right? So Amazon, huge gap down on earnings, and then sell off before a complete V shape into new highs, potentially filling the gap. We are seeing a little bit of a stall right now, but the chart is still strong, decreasing bear volume with bulls coming in to hold, trying to even hold that daily 8. So there's a high potential that this could be a daily bull flag right now. Anyway, so the pattern is gap down earnings on the sell, followed by sell off and complete reversal. You just need to find where that bottom could be. Now in this case, in the Amazon's case, we were tracking this long-term trend line and the GP, which lines up, but ultimately it did wolf. It had a breakdown fake out before an actual move that's coming. Okay, so the other two that I've noticed on the same pattern, one is Wish. Now this one's a little bit different because market cap wise, this is no comparison to Amazon. Gap down earnings, sell off, and now we're seeing a little bit less of a complete V shape. The pattern is still there. Low decreasing bear volume. We're gonna need to see bull volume come in over the next little while here, going into the gap fill. The resistance is at 878. So if we're to run from here, the RSI shows that there's a potential that we can't just run straight into gap fill. But if there's not enough bull volume, we could be looking at a run in a stall at 878. So this potential scenario is still in play, but we're going to need to see bull coming in. Next is Zoom. Very similar again. But the difference is we are seeing some buying pressure already. Actually, let's look at Amazon. Oh no, Amazon is the same thing. So sideways, a little bit of a buying before an actual dip down. So watch Zoom. Could be a very similar scenario. Huge gap down earnings, slight buying up into that resistance. We are rejecting from that resistance of 302, very notable resistance. There is rejections here, supports here, and that's why we had marked that ever since the gap down. So we looked at this chart on Friday, Thursday, Wednesday's video. The anticipation is we're gonna see a slight buy up into that 302 and then reject coming down to that key zone, somewhere along that key zone. Is there anything else we can line up with a key zone ideally? So huge rejection from this long-term trend line. I don't think this will work. Let's keep this here for now. Oh, is that what we're seeing a buy up? This shorter term trend line. Anyways, I don't like that. 62 looks like the beginning of the run. That looks good to me. 62.02 all the way to the top. 588. So GP is right here. So we could see, ooh, that is pretty far. Where did Amazon's GP come in from? So Amazon's GP came from most recent move. Okay. There is no most recent move on this. So it could be here. The last time it touched the long-term trend line. No, we're still already under it. So the only thing I can see on Zoom, GP wise, would be in that key zone. So we could be seeing, you know, watch the reaction at the top of key zone. If that is lost, we'd be looking at GP before an actual V-shaped bounce coming in. So there's I'm watching for a potential pattern developing here on Zoom. We don't know what it's gonna be. We're gonna need to see bear pressure coming in over the next week to confirm this earnings gap down pattern. All right. Next, there is a few other patterns I'm watching to see if it works out. Is money line plays. As you guys all know, that we've been keeping an eye on money line plays. Now ROKU is a little bit red flag now. We did enter ROKU, but I was away from the computer majority of the day over Thursday, Friday. So notice this on Friday, but it's a little bit too late. Big red flag. Finally seeing that daily trend reversal into new highs, but next day unable to see follow through. Immediate rejection, a huge bear pressure coming in, losing that money line. We're gonna need to see at this point. I'm likely to just cut it, but I want to see what the bounce looks like. Probably around the daily 8 I might cut it. Don't like this. It still could very well be a breakdown fake out. From here we can see a continue into new highs, or at least the previous high. So there's a couple scenarios on this that I'm looking at. One, come back down here, up here again, back test of the trend line before going into the 0.382. And with me being in bull position, you know, it is what it is. With me being in bull position, this is the ideal scenario that I'm looking at, because we did miss that Thursday's red flag, or I personally was away. So, but yeah, it is what it is, right? So from here, what we could also see coming up here before a rejection down to the lows. Second possible scenario. And this one would be the main possible scenario. All right, so a couple scenarios we're looking at for ROKU. It was a money line play that got stuffed on Thursday. All right, next is Twitter. Same idea, money line play, almost stuffed. So seems like it's the same reaction, but because Twitter started earlier, it did not get stuffed yet. Could see continuation. We're gonna need to see continuation into next week. This is confirmed daily trend reversal into new highs and then now a higher low. Next week we're gonna need to see that curl going into new highs. Hopefully at least get to the GP. That would be most ideal scenario. But Twitter so far holding up very well. Next is BYND. Same idea. Money line play, slight loss on Friday. A little bit of red flag here because big bear volume coming in. If I'm looking at this chart, I likely wouldn't be touching it. You know, depending on how you draw the money line, this could go lower. Right here. That means we just touched it. So next week is gonna need to see a reversal on BYND. One thing I don't like about it is it did lose the GP. We are looking at 0.786 at about 112.79 right now. But we're gonna need to hold this money line coming next week, see a reversal immediately. Ideally make a daily higher high above with a close above 124.45. Right, and next one, that's same idea, money line play right there. Confluence zones, triple confluence on PTON, Pltr, money line, GP, top of key zone. Bulls need to hold this right here. Friday's low would be a stop. That's easy stop, just under 100 or just under 96. Low risk entry from here, even if we're to move up back up to the previous key zone. 28% versus downward 2%. So 1 to 10 risk to reward potential. Personally, I might not touch this one just because Pltr is not something I'm familiar with. For me, I do categorize them under pandemic plays. They are lowering their bike prices from last I heard. Sales, I don't imagine it's been increasing since pandemic percentage wise, so not something I would be playing. Maybe scalping. I would consider scalping. 1 to 10 risk to reward might be worth it. Next one is a marijuana sector. So with marijuana sector, I'm noticing quite a bit of tickers that's very similar coming up to the long-term money line, and gonna need to see a bounce ideally from here. So if we were to look at marijuana sector, TLRY for example, TLRY is, of the few that I noticed, TLRY is probably on the top watch. We did break down under the money line before, and it served as resistances, and then became a little bit of a chop here, ultimately holding the money line before an actual move up back in February, was it? Yeah, February. So December to February, 2 months run, and now we're coming up to that money line again with potential of reversal, but these upper wicks are a little bit concerning, so we could see a breakdown under the money line again before an actual reversal. So if we were to break down below money line, this is the scenario that I'm looking at. Breakdown, where will we go? Support, yeah, probably over here. Back test coming down to the support again. No, I think the more likely scenario will probably be, because if we break down below money line, that's a very key line, a very key trend line to hold. We should see further bearish action before making a higher high into a higher low into a reversal. So this could be what I'm looking at based on these upper wicks. There's a potential that we're looking at this pattern. And Cron, similar idea, very similar setup. Yeah, very similar setup. Money line, long-term money line. Why is this so much longer? Anyways, multiple supports here, multiple supports here. Again, breakdown fake out became support before the actual move up. Okay, does this qualify for that double wolf pattern? Oh my goodness, it does qualify for the double wolf pattern. Breakdown fake out, new highs getting surpassing these two. New highs coming to the GP before an actual move going up. Whew. Double wolf pattern. So same here, breakdown fake out. GP before an actual move. Wow. Works on TLRY too. Alright, CGC. So you just need to identify that pattern and then trust, I guess, believe that you have found the pattern, believe in your technical analysis, stick with the trade. Now that I'm saying it, I want to take a look at ROKU again. It was a ROKU? No, ROKU was a money line play. What are we in? Netflix. Breakdown, fake out. Yeah, breakdown, fake out. Move, GP. Should see continue. Okay, yeah. So Netflix looks good. DOCU. I don't see GP yet. Breakdown, fake out, move to new highs. Okay, so DOCU would be behind Netflix, but still on top watch. Okay, so let's get back to it. Cron, was it? And do apologize for being all over the place. This is a weekend ticker review. So the main purpose of this video is to prep everyone for what's coming over the next 2 weeks. Identify those patterns. So Cron is same idea, upper wicks. So yeah, very similar to TLRY. Nothing's different there. CGC looks very similar. The only thing different is we had you might be able to find this on TLRY and Cron as well, but we were in the long-term descending wedge. Now part of what's keeping me in, what am I in right now? I think I'm in small TLRY as well as Cron. Part of what's keeping me in it is I'm just looking at this long-term consolidation. It's already down about 70%. It's at the money line. It's near that key zone. It was a long-term descending wedge that we're potentially breaking bull over now. So I don't really see any reason why it should be uncomfortable holding here unless we lose this previous low. Where would be a low that we want to hold? I want to see a hold of this key zone, for example, on CGC. If we were to touch, that would actually be a very ideal entry, first entry. So because this is going to be our first entry, stop depending on how long you're willing to hold it for. So last time we lost the money line was low of 27% below. Okay, so I would keep a stop close by, probably just under here, 1527 if we were to enter on the touch of money line or the top of key zone. All right, so that's marijuana sector. What else do we have? PLTR. I don't think anything's changed on PLTR. We are still slowly grinding up. We are not extended on the daily, not extended on the weekly. 4 hour looks good. Yeah, no significant red flags. So it's a chart that could potentially just continue to grind up until that 2750. We're gonna need to watch because there's multiple rejections. 1, 2, 3, 4, 5, 6. Very key price point at 27. What I have marked is 27.45. But until then, no reason for selling yet. I think it's similar on Airbnb. So Airbnb daily trend reversal confirmation rejection from GP, and we are seeing, it's lots of wicks both ways, but we are still slowly grinding up on that daily 8. No significant reason for sell yet. There is decreasing bull volume with some somewhat notable, very slight bear volume. But as long as that daily 8 holds, there's no reason to be completely out. I would anticipate potentially another revisit of this 152.70 previous support. Now, for those of you that didn't get in before this huge run up, I did mention watch for a back test of 152.70, which over the next 2 days we did get a revisit of that 152.70 previous rejection. Very notable resistance became support. So this chart could continue to run now. It is very ready. Daily is now overbought. nor is hourly or 4 hours. Chart looks amazing on Airbnb. One other one that I'm watching is Ying. So Ying is a Chinese ETF, three times leveraged, and for most of you that have been with our channel for some time, you should know that I'm very interested in leverage ETFs if I do ever play ETFs. So with Ying, you can see there's a huge descending wedge that has formed over, how long is this? The last 6 years, 6.5 years. Triple rejection, upper trend line, 1, 2, and we're coming up to that third touch on Ying. Depending on how you draw this, it could be lower, but and we had a double bottom on the monthly already, 10-11. We could be looking at another touch. Ideally, I want to see another touch, but Ying is looking like an amazing entry for portfolio build coming up over the next, ideally 2 weeks. I want to see a touch somewhere there. Okay, I think I'm gonna keep it. Actually, there's a couple other ones. Let's do Bragg. Seems like a lot of people are interested in Bragg, so we'll try to keep it on the daily watch list. So right now, what we're seeing here, daily trend reversal, big daily bull divergence that's playing out, and then became daily bull flag, confirmed, and now we're forming another daily bull flag with almost double inside bar over the last 2 days, Friday, Thursday. Wednesday was slight bearish, decreasing bear volume, prices holding up, chart looks amazing for continuation. There's no reason to sell this yet, so I did sell some on, what is it, Friday, Thursday, Wednesday, Tuesday. We sold some near the end of the day, so even if we were to buy it back now, it's still lower than what we sold. But I want to give it Tuesday, maybe Wednesday. I want to see what the price action over the next 2 days look like. It's going to be very crucial for me over the next 2 days. If the daily A catches up and we start seeing a movement with bull volume on the shorter time frame, we'll be adding to the position. If we start seeing vice versa, movements start coming in with bearish action, bearish volume coming in, we'll wait for the add. We'll not be exiting positions because we did already sell a little bit here. Half of the position, yeah, and we'll be looking for an addition at around that 1040-ish target. Weekly is, if we run next week, it is increasing bull volume. If we do run next week going into straight into that GP, we'll be taking that position off. Even if we get to that 1380, we'll be taking the position off. We are going to be a little bit extended on the weekly. We are going to be extended on the daily. What about the monthly? Monthly actually looks okay. So overall, I don't see any reason for completely being out of the position on Bragg. There is a whole lot more room to run on this name. Long-term consolidation ever since March 2021. So half a year of consolidation. Now we're seeing a reversal. Chart looks great. Right, so we're going to keep it at that for the weekend ticker review. Thank you guys for watching. And again, thank you for everyone's support. We're coming up to 200 subscribers from pure organic growth. Thank you for watching, subscribing, and sharing our channel. Make sure to leave a comment down below on what tickers you're watching. I will see you guys in the next video.